welcome to this special hour-long edition of Global Business. I'm Lincoln Humphreys, coming to you from our studios in Beijing. China's economy has remained stable and has shown steady growth across various sectors despite a range of challenges. That's according to economic data for the first 3 quarters of 2024, released by China this Friday. Our Cao Chufeng has more.
According to data released by China's National Bureau of Statistics, the country's GDP increased 4.8% year-on-year in the first 3 quarters of 2024. At the beginning of the year, China set an annual GDP growth target of around 5%. This means the pressure is now on the 4th quarter to reach that annual target. But the National Bureau of Statistics says that GDP growth so far is within the expectations of the Chinese government.
Overall, in the first 3 quarters, the national economy operated steadily with progress. The overall GDP growth was 4.8%, with a year-on-year growth of 5.3% in the first quarter, 4.7% in the second quarter, and 4.6% in the third quarter. These indicators did not fluctuate significantly and remained close to the expected targets.
Positive numbers have been seen across various sectors, including a year-on-year increase of 5.8% for China's industrial output, a growth of 3.3% for retail sales of consumer goods, and a decline of 0.2% in the urban unemployment rate. But the real estate sector continues to go down, with total sales of newly built commercial buildings falling 22.7%. However, the amount of decline has narrowed in the first 8 months. The Bureau says we might be seeing better economic performances in the future, especially after a slew of economic policies were released in September to bolster the economy.
In late September, following an important meeting of the Central Politburo, a package of policies was accelerated. These policies significantly boosted market confidence, changed operators' expectations, and revitalized the market. The main indicator data from September shows that the economy has experienced positive changes.
The National Bureau of Statistics says that the effects of different policies are starting to be felt and the economy is steadily progressing, but it also acknowledged that the foundation for sound economic growth still needs to be strengthened. Cao Chufeng, CGTN, Beijing.
What other key highlights are there in this economic data? For those details, my colleague Aaron Liu has the details. Over to you, Aaron. Take it away, mate.
Thanks, Lincoln. Let's break down the numbers. First, the national economy showed a stable growth trend, with positive developments accumulating during the first 3 quarters of this year. China's gross domestic product increased by 4.8% year-on-year in the first 9 months to 94.97 trillion yuan. In terms of agriculture sector, agricultural production experienced steady growth in the first 3 quarters of the year, with value added to agriculture rising by 3.7%. Bumper harvests are anticipated as production levels for pork, beef, mutton, and poultry all showed increases during this period. Meanwhile, the total value added by industrial enterprises above the designated size increased by 5.8% year-on-year during the first 3 quarters. The manufacturing purchasing managers index stood at 49.8%, reflecting a slight improvement from the previous months. So let's move to the service sector. In the first 3 quarters, the value added by the service sectors increased by 4.7% year-on-year. Significant growth was observed in areas such as information transformation, software, business services, transportation, and storage. Software and IT services grew by 11.4%, while transport services increased by 10.1%. Back to you.
Thank you very much, Aaron, for a comprehensive breakdown of that data. For more insights on China's GDP growth and other economic data, let me bring in Shi Jiao, an assistant professor from Peking University HSBC Business School. Thank you very much for your time. While China's GDP growth of 4.8% year-on-year is stable, it falls just short of the 5% target amid external pressures and significant structural economic changes. Should we view these figures as solid or slightly concerning?
Well, I think the economic numbers released today actually turned out better than expected. Not only GDP, industrial production, investments, and consumption all slightly outperformed market expectation. Now, I think 4.8 cumulative growth is a very solid number to start, Because interestingly, as you just said in the program as well, in the recent weeks, the government has just released one of the most comprehensive policy packages to boost the economy. Those policies were made based on slightly more pessimistic expectations. Therefore, now that the numbers are better, the governments are not going to retract them because they have policy credibility and concern, right? So in the fourth quarter, I expect these policies to be part of these policies to be executed, and also there's better market expectation. Both these factors will boost the economy.
Breaking down the GDP data by quarter, growth rates of 5.3% in the first, 4.7% in the second, 4.6% in the third. The numbers are stable but show a downward trend. Do these figures strengthen the case for increased fiscal stimulus?
I think more fiscal expansion is part of the plan anyway, and I think it's a good idea because if you look at data on local government spendings in the past 2 years, it is clear that all over China there was fiscal contraction, by which I mean local governments were cutting their spendings. And these fiscal contractions were not intended because they are a consequence of tightening budget constraints. They constitute a headwind for the current economic recovery. Therefore, I do think that there should be fiscal expansion. But the more important, perhaps, there should be a systematic solution to the problem where either the government, the central government, can take on more debt, or there should be a reform so that local governments can carry out their economic responsibilities in a sustainable and responsible way.
Which industries impressed you the most regarding GDP growth, and which sectors do you believe require more attention?
Well, there are many impressive industries and sectors in China in the recent past. Higher-end manufacturing, digital economy, green industry, etc. So these sectors remain bright spots in today's economic landscape. Regarding to whom we should pay more attention to, I would say that we overall need to strengthen the private sector. If we take a look at investment numbers, despite the overall recovery, it is clear that private businesses are still hesitating. In the current economic downturn, the private sector is more hurt than the state-owned one. So reforms and policies should be made to strengthen the confidence of private firms. And thankfully, I think that's where policies are heading.
That was Shi Jiao, Assistant Professor from Peking University HSBC Business School. Thank you very much for your time this Friday. The Financial Street Forum is underway here in the Chinese capital. The three-day event is an annual platform to facilitate international financial exchanges. It's attracted international attendees to discuss many topics, including financial openness and cooperation. Now let's get on the ground or to the streets for the Financial Street Forum and check in with our Michael Wang. Thank you very much for joining us, Michael, my fellow CGTN anchor there. Get us up to speed at the Financial Street Forum. It seems like China's central bank has really made some big waves at this event.
Hi there. Good afternoon, Lincoln. Indeed, from the Financial Street Forum. Of course, already an action-packed day for day one of this year's Financial Street Forum. We've heard topics ranging from how China and Japan can better cooperate when it comes to the financial markets, the economy, all the way to how finance can better support small and medium-sized enterprises. But as you rightly alluded to, the star of today's agenda has got to be that opening ceremony where we heard from China's big three financial regulators. So I'm talking about the central bank, the financial regulator that regulates the banking and insurance industries, and of course the securities regulator. But let me zoom in a little bit more on China's central bank, the People's Bank of China. PBOC Governor Pan Gongsheng talking today about the central bank eventually going to make some key moves in terms of enhancing the monetary policy framework, this time by focusing on raising consumer prices to a reasonable level in order to support economic growth here in China. Governor Pan also reiterating what the central bank has already done in terms of monetary policy, reminding us that we have seen a steady across-the-board decrease in borrowing costs in the Chinese economy from the short to the medium to a long-term lending rates. Now, if you'll recall, back in late September, China already lowered the reserve requirement ratio, the RRR. This, of course, is the amount of money that commercial banks have to park at the central bank. That RRR was lowered by 50 basis points in late September. Governor Pan earlier today talking about the PBOC considering lowering the RRR again by 25 to 50 basis points by the end of this year, depending on market liquidity conditions. Look, we already saw commercial banks earlier this morning lowering the deposit rate. Governor Pan alluding that we will be expecting the loan prime rate to be lowered by 20 to 25 basis points come Monday. The LPR, the loan prime rate, of course, that is the reference rate that business loans and mortgages are priced off of. Governor Pan also talking about two new market-driven policy tools to stabilize the capital market. So this is about special refinancing for stock repurchases and share purchases. These two new tools being launched today as well. But the central bank reiterating that this is not about central bank intervention. This is a market mechanism where financial institutions and corporates themselves engage with how much shares they want to buy back, and also stressing that this tool is going to be strictly regulated. Excuse me. Too much coffee in the morning, Lincoln. This tool will be strictly regulated to make sure that there will be no misuse of this fund in the stock markets. Governor Pan also talking about China's first monetary policy tool to stabilize the capital markets. So this would be the Securities, Funds and Insurance Company Swap Facility, the SFISW. So this is all about financial institutions being able to exchange certain assets such as bonds and stock ETFs for other kinds of cash-like assets such as treasury bonds. This will provide more liquidity and cash for financial institutions when the capital markets need it, without the financial institutions having to sell off their existing assets and creating more market volatility. But also interestingly, Governor Pan speaking today about the need for the Chinese economy to find this dynamic balance in its economy. So how do we better balance between the speed of China's economic growth with the quality of that growth? How does China balance between the external and the internal factors that will be impacting the Chinese economy? How does China find that better balance between investment and consumption as well? Because during previous economic cycles, the Chinese economy relied a lot when it comes to investment to support the economy, but now there should be a focus on both investment and consumption. So Lincoln, overall, my takeaway from this is yes, Governor Pan spoke about those short-term tools needed to support the economy, but he was also laser focused in terms of introducing long-term, high-quality and sustainable development measures for the Chinese economy as well. Lincoln?
Thank you very much, Michael, for that excellent analysis. No more coffee for you, mate. We'll let you go and get some water there. But speaking of liquidity, China's major state-owned commercial banks have cut their deposit rates for a second time this year. Industrial and Commercial Bank of China, the world's largest bank by assets, reduced the interest rate on time deposits, ranging from 3 months to 5 years, by 25 basis points. The 25 basis point reduction has also been applied by China Construction Bank and Bank of China. The National Financial Regulatory Administration says Chinese banks have a net interest margin of 1.54%. As the 2024 Financial Street Forum gets underway in Beijing, CGTN's Michael Huang also sat down with Richard Yetsenga, Group Chief Economist and Head of Research at one of Australia's big four banks, the ANZ Banking Group. They spoke about ANZ's 4.9% growth forecast for the Chinese economy in 2024 and the potential of the country's capital markets.
Oh, I think there's still a great economic story in China. People get hung up on, well, it's below 5, and of course the target is the official target is an approximate one. And let's remember where China's come from, 4.9 or around 5 in the context of a global economy which is growing at about 3.5, in the context of a US economy that's growing at about 2.5, in the context of Europe that's growing well below 2. I think 4.9 is still going to be a very good outcome, sees China incrementally adding to its share of global GDP, sees China still as the largest contributor to global GDP, and obviously leaves China as the largest trading nation in the world.
I want your perspective in terms of how you see the evolution of China's capital markets, especially as the country continues to modernize and integrate itself more into the global financial market.
China is the great untapped capital market opportunity still. And we've kind of seen a few waves, a lot of offshore enthusiasm, perhaps in the last couple of years a bit less offshore enthusiasm, but clearly it's an objective that's important to China, and I think for many investors as well, the scale of the market here and the returns that are still on offer, and the diversification that's still on offer from having capital in China is still there. I think some comfort needs to be gained around the direction of the economy, and if the policy effort that we've seen the last month or so gains traction, which I think it will, I think that will help bring some of that confidence back. I get the sense there's a lot of waiting and watching. The stimulus announcement at the end of September generated a lot of flurry in some of the capital markets, but I think the patient capital is the capital that you want, and they're still waiting to see the effect of the stimulus and the totality of it, which continues to grow almost every day.
The coffee market in Beijing's Xicheng district has been buzzing lately. In addition to offering discount vouchers, a variety of delicious coffees are available for tasting. Our reporter Aaron Liu has the highly caffeinated details.
The 2024 Financial Street Forum shopping season has officially begun, featuring large discount vouchers, an international coffee market, and a Huawei product roadshow.
It's now 12 p.m. As you can see, it's packed with the people. There are over 70 shops offering food and coffee, so let's go and check it out.
Right now, since we are selling 1 spoon of tiramisu per 80 yuan, customers can add 48 yuan, so 128 with like the original price, and we add our 20% discount for food and drinks in our restaurant, valid for 1 month.
The event is backed by a 1 billion yuan fund and will run for a month. During this period, Xicheng District will distribute vouchers to the public, providing benefits through various platforms. Given its location on Financial Street, many office workers are gathering during lunchtime.
I just tasted Layolit coffee. It's quite unique, and I'll definitely visit the store again to try it.
During the Financial Street Forum shopping season, we've planned the Financial Street International Coffee Festival for the general public. This includes a coffee market with over 70 coffee, dessert, bakery, and creative brands participating, as well as a coffee and dessert competition where regular consumers serve as judges.
The main offline events began on the 17th and will last for 4 days. Other highlights include a Huawei product roadshow and a car carnival. In addition to the offline activities, many coffee shops in Xicheng District are also taking part.
Check out what I got. This is the coffee shop map of Xicheng District. It features about 38 different coffee shops. With this map, you can have a 10% discount. Let's pick one called Your Cafe and go check it out.
Hidden in the northwest corner of the first floor of the Baita Temple Pharmacy in Beijing is a unique coffee shop, Yao Cafe. As you step inside, you can smell the mix of herbal medicine and coffee.
I'm from Zhejiang, and this is my first visit here. I ordered a cup of coffee that contains ingredients from traditional Chinese medicine to soothe the throat.
Many of the drinks at the shop blend elements of traditional Chinese medicine with coffee, maintaining the rich taste of coffee while highlighting Chinese cultural characteristics.
Look, it's so cute. These desserts are from this shop. A cake shaped like a tanghulu and a cake shaped like a temple. And this is a grilling-galette.
Besides the unique food offerings, this panda-shaped sachet caught our attention.
This is our newly launched sachet, filled with Chinese herbal medicines that help refresh the mind and body, bringing traditional Chinese medicine culture closer to the lives of younger people.
Zhang told us that in October, the vouchers attracted many consumers, especially during the National Day holiday, when the lines of waiting tourists were long.
The government should also consider rollout policies from two sides. From the demand side, to help our consumers to have more disposable income to spend. At the same time, also consider to have some policies supporting our supply side, those companies in the markets, from subsidies or tax benefits, all sorts of policies to help them to stay and have a sustainable growth in the markets.
With coffee, beautiful views, and delicious food, this Asian city offers a completely different experience during the October shopping season. Aaron Liu, CGTN, Beijing.
Beijing, the world gathers at the 2024 Financial Street Forum, where finance, government, and industry come together to shape the future.
Building trust and confidence for shared economic stability and growth.
Discover how financial openness and collaboration drives progress across borders.
Montada Shali Liamia Alfenio Alba o
Le Forum de la Calle Financiera 2024.
Le Financial Street Forum 2024.
Join CGTN for exclusive insights live from Beijing's Financial Street.
China's fixed asset investment continued to grow in the first 3 quarters of the year. The indicator, which measures spending on various elements such as infrastructure, property, machinery and equipment, increased by 3.4% compared to the previous year. An official note emphasised impressive growth in the high-tech sector, which surged by 10%, significantly outpacing the overall growth rate. However, investment in the real estate sector remained weak, declining by more than 10%. Wang Zhonghua, Chief Statistician at the Urban Department of the Statistics Authority, noted the market may have reached its turning point. He mentioned that expectations in the housing market have been improving since late September, likely due to a series of supportive measures introduced by both central and local governments. Statistically, the decline in new home prices across China's 70 large and medium cities stabilised on a month-to-month basis in September. In first-tier cities, Beijing, Shanghai, Guangzhou and Shenzhen, new home prices decreased by 0.5% in September compared to August. Meanwhile, new home prices in second-tier and third-tier cities fell by 0.7%. Several new measures to support the property market were announced at a State Council briefing yesterday, including a massive remodelling program as well as credit support expansion for whitelisted properties. Take a listen.
Across 35 cities nationwide, there are approximately 1.7 million housing units throughout urban villages and dilapidated buildings that are in dire need of being renovated. For those types of projects, where residents have a strong desire for renovations and safety risks are significant, and preparatory work is relatively underway, construction can begin ahead of schedule.
As of October 16th, loans amounting to 2.23 trillion yuan have been approved for whitelisted real estate projects. By the end of 2024, the approved loan amount for these projects is expected to double, surpassing 4 trillion yuan.
Property sales in major cities across China are experiencing significant growth. In Beijing, new home sales reached 140,000 square metres during the second week of October, which is more than 3 times the amount sold the previous week. Shenzhen reported an astonishing increase of more than 450% in weekly new home sales. In both Shanghai and Beijing, daily transactions of pre-owned homes surpassed 1,000 units. More than 11,000 units were sold in Beijing within just 13 days following the announcement of relaxed purchase regulations. Let's take a look at how equity markets performed on the back of that third quarter data out of China. And we'll take a look at Hong Kong and Tokyo as well. We cross now to Timothy Pope in Shanghai. Timothy, thanks for joining us. It's been a turbulent week for the Chinese mainland stock markets. How are things looking today?
That's right, Lincoln. Chinese A-shares had a strong finish to a very choppy week. The Shanghai Composite Index added about 2.9% today. The Shenzhen component rose 4.7%. The onshore markets have really alternated between gains and losses every day this week. And even today got off to a bit of a shaky start after a mixed batch of economic data released this morning. However, investors chose to focus on the fact that the central bank's asset swap scheme to fund stock buying really gets underway today, starting to funnel up to 800 billion yuan into equities. Now, the PBO says that so far 20 companies have had their applications to be part of the scheme approved, and asset swaps so far have surpassed 200 billion yuan. So that's a lot of liquidity which will be finding its way into stocks relatively soon and can be expected to give things another boost, because the rally which began at the end of September has started to ebb a little. Stocks are now down more than 10% from their peak on October 8. But there does seem to be some confidence on display. There was some solid performance from real estate stocks today. Although they were lagging behind the big winners in tech, healthcare and the consumer sector. But the latest real estate data is giving a bit of a boost to real estate stocks, even though in some cases it is a little bit of a lagging indicator, and we have yet to really see some of the property announcements really be reflected in the latest figures, Lincoln.
And how's the story in Hong Kong and Tokyo? How's it looking there?
Yeah, Hong Kong markets rose today. The Hang Seng was up about 3.6%. Real estate stocks did well there too, reversing yesterday's losses. But in Hong Kong and on the Chinese mainland, actually, chip stocks were among the biggest gainers. On Wednesday, the Cybersecurity Association of China said Intel's products sold in China should be subject to a security review. Now, this is an industry group, and it described Intel as harmful to Chinese national security. Intel has since responded, saying in a statement on its WeChat account late yesterday that it will work with Chinese authorities and clarify any concerns. But if there is a review, it would likely hit Intel sales in China, definitely, and that could potentially benefit Chinese rivals. So we've had Chinese chip stocks doing pretty well in the last couple of days. The chip giant SMIC was the Hang Seng's best performer today, rising 16.4%. Over in Japan, the Nikkei was up as well, although only marginally. It added about 0.2%. Investors there have been booking some profits as the index gets back up to near 40,000 points. Today, the heavyweight fast retailing, which owns Uniqlo, was keeping the Nikkei positive. It added more than 1%. There's also some political uncertainty in the mix in Tokyo. The national parliamentary elections are due at the end of the month, and there's a possibility that the ruling LDP may lose its majority in the lower house. Now, that would force Prime Minister Shigeru Ishiba deeper into coalition, and the polls aren't looking great for the LDP on that front ahead of the election on October 27, Lincoln.
Thank you very much. Our Timothy Pope there in Shanghai with some excellent analysis on quite a bumpy week. Very dynamic. China's foreign trade hit a record high for the first 9 months of this year, driven by improved demand from home and abroad. That's according to the data released by the country's customs authority. Foreign trade surged more than 5% in the first 3 quarters to 32 trillion yuan. That's a record high, exceeding 10 trillion yuan in each of the 3 quarters, which is also a new record. Breaking down the numbers, exports grew more than 6% to more than 18 trillion yuan, driven by a warm-up in external demand, while imports increased more than 4% thanks to sustained momentum in China's domestic markets. On the export side, Vice Minister of the General Administration of Customs Wang Lingjun said China's export structure improved further, with high-end equipment such as integrated circuits and automobiles growing more than 40%. Looking forward, Wang said China's foreign trade faces challenges, mainly from rising protectionism, but at the same time, positive factors are also accruing to support growth in the 4th quarter. The theme of this year's Canton Fair is Bigger, Smarter, Greener, with a focus on broader market opportunities for trade partners from China and around the world. Let's turn to our reporter Xu Hua in Guangzhou for some more insights. Xu Hua, could you share the highlights and your observations from the Canton Fair?
Hi Link, today is the 4th day of the Canton Fair. Still another busy day for buyers and sellers from around the world. As you can see, this hall has been crowded with all the buyers and purchasers. And this year, I just as you mentioned, to summarize the highlights from the first phase, I would put it into 3 words. The first one is bigger. This year, there are 55 exhibition zones, spread across over 1.5 million square meters. That's over, 200 American football fields. And that means China is much more open and open wide for business. Second, smarter. I will conclude it as smarter. As you can see in this hall, there are plenty of industrial robots, automatic machines, and laser equipment. Each year Chinese manufacturers introduce innovations that are even more advanced and intelligent than the previous session. And also the third word, as you mentioned, is greener. For the first time, the Canton Fair has introduced the hydrogen energy theme, aiming to move closer to achieve carbon neutrality. As I've noticed that the new energy vehicle zone has been one of the most popular sports for global buyers, especially for European buyers. Even though the European Union has imposed tariffs of up to 45% on the Chinese-made vehicles, but still, I've talked with some purchasers. They are still willing to purchase from China because they have very lower prices and higher quality. Here, I'm very glad to be joined by Ms. Cai Yi from the China Foreign Trade Center. So thank you for joining us. What do you think are some of the highlights from Phase 1?
Yes, so Phase 1 is themed Advanced Manufacturing, and it features mainly new products, new technology to reflect the new quality productive forces. So we have over 3,600 exhibitors that are showcasing the new 3 export products, digital technology, as well as smart manufacturing. At the same time, over 4,200 exhibitors hold the titles of the national high-tech companies, the little giants, and also the manufacturing single champions, which account for nearly 38% of the total exhibitors in Phase 1.
It's amazing. So what role do you think the Canton Fair play in China's economic growth?
So Canton Fair's buyers come from over 220 countries and regions around the world, which means that it has served as a platform for China's high-level opening up. Also, since its establishment, about 1.5 trillion US dollar worth of transactions have been achieved at the Canton Fair in total. So it means that we have made our share to China's foreign trade growth.
Yeah, it's really a carnival for both buyers and sellers. Thank you for your time. So looking forward, the Phase 2 will start next Wednesday and will last for 5 days. So we are expecting to see more opportunities will be presented for trade partners from China and the world. Back to you.
Thank you very much, Xu Hua, for that walkthrough there in Guangzhou at the Canton Fair. For more insights on China's foreign trade, let me bring in Zhu Haibin now, Chief China Economist of JP Morgan, for some more information and analysis. Thank you very much for your time. The total import-export value for the first 3 quarters increased by 5.3% year on year. Which industries contributed most significantly to this trade growth, and which sectors need improvement?
Yeah, so export indeed is a positive factor. So if you talk about the export value term, but if you measure by volume term, export performance was even stronger, actually rising more than 10% year to date. If you look at the breakdown, I would say that high-tech and the mechanical and electricity product actually is performing much better. They're rising by 3.8% or nearly 5% respectively. I would say the weak link, if you look at the export data breakdown, is coming from the lower value of products. Actually, for this part, China's export in dollar term declined by nearly 8% year to date.
Is the growth in these sectors sustainable moving through the rest of this year and into next, especially considering the external challenges faced this year? They're not likely to dissipate anytime soon.
Yes, so if you look at the China's export, quite resilient in the first half. Of course, in the last 2-3 months, we see the export data is becoming a little bit choppy. But overall, we don't expect the export will deteriorate for the rest of the year. We still maintain our forecast that export will maintain mid-single-digit growth for the full year. So I think the risk is probably will increase in 2025. Of course, several reasons. One is that when you talk about the global economy, particularly from the advanced economy, the growth might be slowing down. And recently, actually, manufacturing PMI globally actually fell below the 50 threshold. So that from external demand perspective, that could be a challenging going forward. For the second key issue people worry about is a geopolitical risk, particularly U.S. presidential election early November. And the risk is that if Trump wins the election, then the tariff war may escalate again, and he has threatened actually to hike the tariff on Chinese imports from 20% to 60%. Of course, if that happens, that will be a big problem for the export performance back into 2025.
Trade with Belt and Road partners outpaced overall trade growth, increasing by 6.3%. Additionally, trade with BRICS countries also exceeded the total growth figure. Does this growth offset decline in trade with non-BRI and non-BRICS countries?
Yeah, that's a very good point. I think that if we look at China's export resilience, actually, we talk about the breakdown by product. But I think the question we should ask is that what is driving to the resilient performance? If you look at China export to the G3, right, the US, EU area, and also Japan, the so-called the developing economies, actually, the China's market share has been declining. Actually, the export to this area has been relatively weak. So it's benefiting from the China's diversification benefit in recent years. So by diversification, we're talking about two dimensions. One is that diversification across the export destinations. You talk about Belt and Road countries, but I would say it's a more broadly China export to the global south has expanded actually in recent years. So for example, this year, China export to LATAM countries, China export to the ASEAN economy actually is outperforming compared to the export to other regions. And the second dimension of the diversification is actually moving up in the value-added chain. So low-value exports has been performing relatively weak, but China has been moving up in the high-value added. For example, the semiconductor exports actually has been increasing by nearly 20%, and also auto exports also increased by nearly 20%. So I think through the efforts of diversification by export destination and also by products, that's actually the secret why China has maintained a decent share in the global exports.
And recent economic reforms have focused heavily on promoting the private sector. Imports and exports by private sector companies grew by almost 10%, accounting for 55% of the total trade. Do these figures indicate that these reform policies are effective?
Yeah, so of course the private sector is important. It's actually account more than 50% of the GDP, and also of course even bigger share in terms of employment. And particularly export is still about 20% of China GDP. So it is important for the economic growth and also employment. But when we talk about the weak confidence in among Chinese private sector, I think that it's not a broad-based. Actually, it's quite different across different sectors. If you look at for example, if you look at the fixed investment breakdown, private investment in the service sector has been generally very weak. Private investment in real estate market collapsed, but private investment in the manufacturing sector actually has been very strong. So I would say from the export, actually, this is partly related to the resilient performance in the export sector. Many of them, they are manufacturing exporters. So I see that the very different the situation when you talk about the confidence in the private entrepreneurs. And of course, that the government should take more measures actually to convince the private sector actually they're part of the Chinese economy, and they will be treated equally with the SOE sector. And as we see, encouraging changes, actually policy is changing in that direction.
Chu Haibin, thank you very much. Chief China Economist of JP Morgan, really appreciate your time.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global Business, only on CGTN.
Guangdong, Hong Kong, Macau, Greater Bay Area marks a vibrant hub of innovation and opportunities that has attracted countless young dreamers since its establishment 5 years ago. Our Olivia He embarks on a whirlwind adventure, illuminating the unique stories behind the ambitious youth driving this dynamic region. Let's take a look.
Today we have a very special mission. I invite you guys to join me for a one-day bus experience at the Greater Bay Area, where we'll meet 3 very young entrepreneurs from different industries, all born in the 1990s. Hello.
Hello, Jason. Welcome our first boss, Jason.
And what factors do you think young people should consider when starting a business?
I think to understand their strength and weakness, and also the passion. If there's no passion, I don't think they can continue doing the same work every single day.
So what made you want to organize an event like Beyond Expo?
I think when we look at the whole Asia region, we don't really see a platform that could gather the whole region. So we wanted to showcase the best thing in Asia, and the market is so huge in Asia, but it's very fragmented in some sense. So we wanted to bring people from not only from China, but also from Southeast Asia, and also people around the world to come as well.
And what's your take on how the Greater Bay Area is shaping the future of tech innovation and also creating opportunities for young entrepreneurs?
Yeah. I think the GBA is very interesting. It's a market that is having Hong Kong SAR, Macau SAR, and also 9 cities in Guangdong. I think the population is around 80 million people right now. It's huge in size. Market size is huge, and also opportunities are there. We have the whole supply chain in GBA. Hong Kong SAR having the one of the biggest financial center in the whole world. Macau SAR being the entertainment hub. And also, I think the 9 cities in Guangdong, they provide a lot of companies, a lot of opportunities to produce their products there, and also to test the markets there. So if you can survive in GBA, I think you can expand it to outside of GBA, which is other part of Chinese mainland as well. So I think these are something that we believe that GBA has a lot of opportunities, and it not only for China. I think it's also for companies outside of China to look that they are interested in the Chinese market, and they can use GBA as a platform to get into other places in China.
As Jason mentioned, the Greater Bay Area is a popular destination for foreign enterprises looking to invest in China. And many individuals are flocking here for better chances too. This cozy cafe in Shenzhen is owned by 2 South Korean women.
We first came to Shenzhen as exchange students to learn Chinese. Once we were able to communicate smoothly, our love for the city made us want to stay.
The 2 girls moved to Shenzhen 8 years ago. At that time, not many people were starting their own coffee brands in the city. Most preferred visiting coffee chains. As South Koreans, they shared a deep love for coffee culture and high hopes for Shenzhen's coffee scene. Thus, they were inspired to stay and open a coffee shop together.
In South Korea, coffee culture is very strong, so we decided to introduce some popular Korean coffee beverages here. Like our signature Vienna coffee, which has become a crowd favorite, our daily revenue can sometimes reach up to 40,000 yuan.
After graduating, they used their savings to open up a coffee shop. In just 3 months, they navigated the processes of selecting a location, renovating, creating a menu, hiring staff, and finally opening their doors.
We find the entrepreneurial atmosphere in Shenzhen to be fantastic. Opportunities are countless because there are so many young people here, and everyone is creative and full of ideas. The government also provides a lot of support for entrepreneurs. For instance, when we applied for our business license and food permits, the entire process was incredibly fast.
The coffee scene in Shenzhen has grown rapidly in recent years, and the owners are very proud of their venture. They have now opened a 2nd location in the city. To them, their cafe may just be a thing, as they welcome more exciting adventures in life on top of the success already achieved. Some people open cafes as a business venture, while others make use of cafes as a workspace. Digital Sparks is one of the latter.
What we are building is a media company that operates in 3 key areas: incubating new media influencers, leveraging e-commerce on emerging platforms, and providing comprehensive training in new media.
We used to be colleagues in the same internet company. Each of us brings a unique expertise to the table, and we were eager to explore the extent of our influence in the market.
For a lot of young entrepreneurs these days, not having set working hours and being able to work from different cities is just how things are now.
Our primary focus is on the Hong Kong market, where we identify promising key opinion leaders and assist them in penetrating the mainland market. Our days are dynamic. We might conclude business in Guangzhou by morning, drive to Hong Kong by afternoon, and find ourselves in Shenzhen by night. Even though we're not locals, the Greater Bay Area has really started to feel like a second home for us. It's a lively place where we can chase our dreams and take our careers to the next level.
The Greater Bay Area is like a playground bursting with endless opportunities, inviting entrepreneurs to step up and turn their ideas into reality. Is where the everyday magic of making dreams come true actually happens.
Today marks the second day of the ESG Global Leaders Conference in Shanghai. Adherence to ESG guidelines, which pertain to positive contributions to the environment, society and governance, has become a mandatory standard for corporations and various social entities. Our reporter Ho Jing spoke to participants across the financial, mining and construction sectors to gather their perspectives on international cooperation in ESG.
Themed Uniting for Global Prosperity, the conference has gathered nearly 300 distinguished speakers, including international dignitaries, Nobel Prize laureates, representatives from over 30 international organizations and beyond. This prestigious event encompasses 9 parallel forums addressing over 50 core topics, with a significant focus on promoting green development as one of its primary agendas.
We must adopt more ambitious emission reduction goals for 2030 and also ensure that we have in the necessary mechanisms to continue to aggressively reduce emissions.
As Xi Guohua, president of Citigroup, just illustrated, ESG is rapidly transitioning from selective questions to mandatory questions. This demands all parties provide collective answers to these shared goals and work in collaboration to foster progress.
We have been very, very active participants in all the international bodies that make these international agreements. Now, we then use these agreements and then come back to our country and then make them into laws and regulations.
Chinese companies are not only fulfilling their ESG commitments within China, but also collaborating with international partners to establish localized ESG standards and practices in their global endeavors.
We are a Canadian company. We're public in Canada. In 2015, we introduced the green mining. In 2018 and 19, we introduced CITIC. We're very proud to say that every single ton of the copper that we produce has been regarded the greenest in the world. This is not just what I'm saying, this is from the third parties evaluators.
China Mobile has been a long-standing trusted partner of Kazakh Telecom. So, as I say, we are Sunny Renewables. It's a producer of windmill equipment. We have signed an agreement with them, and before the end of this year, we will do the localization project. They will start building, in November, they will start building a plant together with us in Kazakhstan, in Zhambul region, which will be producing equipment for windmills. So it will add its contribution to the carbon neutrality goal, which we, as Samruk-Kazyna and as Kazakhstan, are devoted to reach by 2060.
Chinese companies are integrating ESG values at the planning and evaluation stages of future projects, rather than merely considering ESG standards during project execution. During the conference, the 2024 Shanghai ESG Development Report was released. alongside the initiative of building a green and win-win partnership for a sustainable and better future, and numerous other international cooperative agreements. These releases and signings contribute further wisdom and strategic plans from Shanghai and China to the global community. Hou Jing, CGTN in Shanghai.
5G technology has been in use for more than 5 years now, and while some in the developed world may take it for granted, 5G's rollout has been slower elsewhere, leaving some countries further behind when it comes to the technology's enormous potential. That's where Chinese companies are proving pivotal, as CGTN's Alistair Baverstock reports from Mexico.
Mexico City, where Dahua, one of China's leading security tech companies, is launching its products for the Mexican market. On offer here are the latest security cameras, equipped with thermal imaging, facial recognition, the ability to deploy security drones, and all interconnected through 5G technology and the so-called Internet of Things.
The Internet of Things refers to the interconnectivity that smart devices can have between themselves without the need of a connection to the Internet itself.
It's a technology that is advancing fast into AIoT, the artificial intelligence of things. Today, China is incorporating artificial intelligence into its 5G technology. And for other countries to catch up to these technological advances, the first step is to have the 5G infrastructure. Yet in Mexico, that remains a challenge.
Mexico is a country that's taking a long time to adopt this technology. Less than 40% of the country has 5G coverage, which makes internet services very weak.
Increasing 5G coverage in Mexico and across Latin America as a whole has been a slow process. Dimitri Flores is a 5G engineer in the telecommunications sector.
It is still ramping up in Latin America, in contrast with what we're seeing in Asia, for instance, and Europe and even the US.
However, he says that Chinese interest in the region is growing.
I think that China has started to enter the Latin American market with some partnerships. They build these partnerships with local operators so that they can reach the potential customers locally. So I think that it's a very good moment for Chinese companies.
As 5G rollout continues in Latin America, it's Chinese technology that may bring the region up to speed more quickly. Alistair Baverstock, CGTN, Mexico City.
Moving on to some other business headlines we're tracking at this hour now. US stock index futures continued to rise on Thursday, following a 0.4% increase in the country's retail sales for September. Additionally, the Labor Department reported 241,000 Americans filed for unemployment benefits for the week ending October 12. In Florida, US homeowners are concerned about skyrocketing insurance costs after another damaging hurricane hit last week. The state has experienced 4 major hurricanes in the past 4 years, leading to soaring insurance premiums and some insurers reducing coverage options. Meanwhile, TSMC, the world's largest contract chip maker, announced a 54% increase in third quarter profit, driven by a surge in demand for chips used in artificial intelligence. The company also projected a nearly 30% increase in full-year revenue for 2024 in US dollar terms, exceeding previous forecasts. As China continues to reform and open its capital markets, Europe's largest asset manager is identifying new opportunities. CGTN's Michael Wong spoke with Amundi's Asia CEO to discuss the company's perspective on the growth potential in China's and Asia's wealth management markets.
Chinese investors is very home bias, a little bit like US investors. So 80% or above, they are pretty much investing in local assets. So we have touched on in the fact that the wealth management products is pretty much local. I think these are all the lower risk products that they will continue to look for. At the same time, offshore opportunities that, especially for the higher net worth clients, they are thinking about how can they better allocate their portfolio or their money by investing in a more diversified way. So from that perspective, fixed income could pose a bit of interest for many mainland investors. For Amundi, we have different kind of strategies, and one of them, just to name it, is to invest in gold. So think about it, gold is at record high. And if you are able to diversify some of your underlyings to gold as an example, not saying I'm promoting gold, but like this is something that could help the investors to ride through the journeys. So having a more diversified portfolios, I think would help them.
For Chinese investors, or for investors here in Asia, broadly speaking, you mentioned this uncertain market environment. Do you get the sense that they're more risk averse right now, or because of certain return profiles, they want to be more risk taking?
Depends. It depends. I think in general, I think one of the biggest phenomenon happening in Asia is chasing income. Chasing income in a sense of, because maybe the capital market has been too volatile. And a lot of the investors nowadays are thinking, okay, if I can get 3, 5, 7, 9% pretty steady income on an annual basis, that's actually not bad. But obviously 3, 5, 7, 9 is a huge gap. So it depends on their risk appetite. It depends on how long that money could stay. It depends on how much of a liquidity they are looking for.
Short term, you mentioned Chinese economy may be facing some headwinds, but what do you see as the structural forces driving China's economy in the long term?
I think China has been recovering better than expected, at least from a Moody's perspective. So it's okay to, and this is a market cycle. Like when you have market cycle, it goes up and down. Right now, I think the key would be to hang on to it, to making sure that the consumption sector, the property sectors could be in the short term having a bit of pressure. But look at the new energy sector. China is way ahead when it compares to other nations in terms of solar panels, in terms of EVs, in terms of batteries. I am absolutely confident that we can find good investment opportunities this long term. You just need to focus on what are the things that for that particular sector it could work well, and then underweight the rest.
That is all for this edition of Global Business. Before we go, we'll leave you with some Business Insider's key insights on China's economic prospects. Thank you very much for watching this special Friday edition. Have a great day. Bye for now.